Let's start with cash, and we did a video 4 months ago where Buffett sold a lot of stocks and his cash position now is huge. If you look at the balance sheet, he has now 29% of total assets in cash. He is invested in short-term US treasuries that still have a yield, 4% of 300 billion. He will still make 13 billion in interest on that cash position. Of course, he increased his cash position as interest rates on short-term bonds went up, as stocks went up. Here, he still had a significant cash position, but it was in the teens. Now, the pros of holding cash are there is no risk. So you hold cash, if you have $1 million now, you will have $1 million in a year. Then there can be a yield. Now it is 4%. It used to be even 10% back in time. It used to also be zero, even negative yields a few years ago in Europe, which is crazy, but we have lived through that too. And then another pro is that if there is a crash, it gives you firepower. It gives you an opportunity to buy on the cheap. On the con side, there is inflation, which is a given. When you hold cash, if there is a yield, maybe it will cover for inflation, giving you a zero real yield. Over the past decade, the real yield was even negative. Then it also depends on how the government measures inflation, which can be debatable. So holding cash is unlikely going to increase your purchasing power in the future. And then there is also the opportunity cost. If you hold cash, if Buffett bought more Apple in 2016 instead of sticking to a 10-50% cash allocation, he would have been much richer now. So when it comes to cash, we can say it is a store of value, safe haven. So there will be a small return, perhaps a good small return in case of whatever happens with a negative, let's say, inflation effect, and there is low correlation to the market, or even, let's say, no irrelevant correlation, because you get your yield now here at 4%, and then the market can do whatever it wants. The key question is, will the 4% make you richer over the long term? Because now, with the market where it is, it seems, and also with what Buffett did, that yes, holding cash is the smart thing to do, because it's likely the market will not deliver as great returns as it did in the past. But we cannot know that, so we have to see how cash as a strategy fits our requirements. And now it is 4.3%, but just a while it was 0% yield, and with 0% yield and, I don't know, 6% inflation, you are not going far. And then there are other considerations with cash. If you hold cash, then if there is a crash, the question is, when do you buy? 20% down, 30% down, 40% down, 60% down. So you cannot really know what happens and when. How much cash should I have? Should I be 20%, 40, 60? Buffett is now at 30, has been at 10, 12, 15 over the past decade. So again, a consideration to think about when it comes to cash exposure. And the risk is, what if inflation bites, which is also a possibility that we'll discuss more in the bond part of this video, and there is no crash from an inflation perspective, but there is a loss of purchasing power from the cash perspective. I personally don't have much cash, so I just buy my businesses and do that way. However, I'm looking at other hedging strategies and options. Just a note here on Buffett, I think he's looking at potential targets, the private equity bubble that might burst in the next 5 years, 10 years, and then he could go in there, looking at all those debt issues where they have overpaid for assets that might need Buffett's 9% private placement with equity benefit style investments. So he's waiting, he's patiently waiting, and he'll likely wait for a few years. He might be 180 years old when he deploys the cash, but it's still Warren Buffett. And you never know when will this happen, when you can buy. So should you buy here or sell here, go more into cash rebalancing? It's something that is a consideration to think about when you create a strategy and to calculate the potential risks and rewards, the cost of this cash hedge versus the reward of not having that cash hedge, and how much exposure in cash.